Hello everyone, welcome to this video tutorial. In today's tutorial, we are going to talk about the Bollinger Bands. This tutorial will have two parts. The first part of this tutorial, we are going to introduce how to bring up Bollinger Bands indicator from our technical analysis tool. Also, how to configure your Bollinger Bands indicator in the chart. Maybe I'll show a little bit hints of how to use it in the indicator filter creation. So that's the first part, and then the second part I'm going to share uh, my understanding of Bollinger Bands with you guys, and also introduce some of the use cases when people use Bollinger Bands. So the second part is more like share my understanding with everyone, and it's not a trading recommendation. It's just yeah, some knowledge share. So I'm sure some of you guys have much better understanding of the Bollinger Bands than me. Um, yes, but that's fine. So you can listen to other people how they're using the Bollinger Bands, and so it helps some of the guys who has no idea of the Bollinger Bands and to more understand this indicator. Okay, let's go jumping straight into our application. Okay, as you can see, I already opened three charts. The first one is obviously uptrend. The second one is a downtrend. The third one, this worth one, is including an uptrend and consolidation period. So when you when you open a chart, how do you introduce the Bollinger Bands indicator into your chart? So as you can see, you can go into here, the indicators drop down list. The second one, you click on the Bollinger Bands and you introduce the Bollinger Bands indicator into your chart. As you can see, the Bollinger Bands now is drawing on the chart. So once you open this indicator, the left hand side of this area is the place you can configure this indicator inside of your chart. Let's go through each item. So the first one is the standard deviations. This one is the very fundamental of the Bollinger Bands calculation. I'll talk about a little bit more in this second part. So here you can see if you change the type, the Bollinger Bands drawing the tunnel width changes. Okay, so type 3 is the widest parts. You can see the already ending price action happening outside these bands on here. But if you change the 2, you can see more price actions happening outside the bands, either upper or lower bands. You can see you can more price penetrates the upper bands. Type 1, you can see the narrowest one is the most sometimes half price actions happening outside of the upper bands. Okay, that's why the default way is the type 2. I'll explain why you're using type 2 later. Second one is the average arm. As you can see, the Bollinger Bands consist of three parts. The middle one, the red line, represents the simple moving average, represents the average price. So this red line actually calculated based on this configuration. If you open a chart, it's a weekly chart, and you say 20, so this middle line is the 20 weeks moving average. Obviously, you can change whatever you want. The default one, some people like to use it 14. Some of the charting software, so people using 20 as default. The next one is the fill color. As you can see, some people might want to see the moving average, the Bollinger Bands, the bands has been filled up with the color. So basically you can specify what the color you want. And if you check the set fill, as you can see, the colors fill into that band. Also, you can specify the fill opacity. You want it to be more transparent, and you want to show up the candles on charts behind the bands, you can make it more transparent, or you can just totally hide them. Okay, so that's a slider. The next one is the upper line width. I'll very quickly go through this. The upper line width is in line with the upper band, and you can specify the color. Okay, and then also you can make a dash. The middle line is the same thing. You can make it width in a thicker, and you can change the color. Let's just upside, and also you can specify the dash in the middle line, and also the lower bands line you can make it thicker. So also you can change its color to another color, and then make a dash as well. Okay, we finish the steps, and then we transfer the entire drawing style into different style. So yes, the save button right here, if you click on a save, that means you're happy with the style you just configured. You want to save this entire configuration into your unified chat opening mode, which means you can save it to use it later. Once you save it, next time if you turn on the chat opening mode, unified chat opening mode, if you turn on this mode, and all the charts, once you open it, they'll have this style of moving out, this type of style of Bollinger Bands. We have a standalone video to introduce how to create your unified chat opening mode. You can go back to that video, then check the details. Okay, let's close this thing. So once you have the, this is what we have got for how to configure the Bollinger Bands. Another thing I just want to show you guys is the Bollinger Bands can be used as the indicator filter creation. So basically, you can create a new indicator filter. Okay, so you can add conditions. As long as you have this Bollinger Bands included in this indicator filter creation, as you can see in this drop-down list, you can use the Bollinger Bands to create a indicator filter. So basically, we can specify as a weekly Bollinger Bands. We use in standard deviation type 2. In the previous chart, we use in default at 20 as the average on calculation base. Once we have specified all of this, as you can see the option, we can have this many of functions be used in the in this filter. For example, I want to find out all these Bollinger Bands with a higher price outside upper Bollinger Bands, which means super overbought, and then say when this condition is true and safe condition, so these conditions can be used later when you're doing the market screening. Okay, we have more videos on this topic in another playlist, and check out those advanced contents in those playlists. All right, let's close off indicator filters. Let's remove all of this. Okay, I think that's pretty much the first part of our tutorial. So if you guys want to leave, you can leave now, or you want to stay with me to the end of this tutorial, and we are talking about this particular Bollinger Bands indicator in the second part. Okay. All right, let's get started. So first of all, what is the Bollinger Bands? The Bollinger Bands is a technical indicator, and actually it was introduced by Mr. John Bollinger, who was the guy in the Wall Street and spent years in market, and he introduced this indicator. He invented this indicator. The special part of this indicator is he was introduced a standard deviation into the technical analysis word. So by using those mathematical or statistic formulas and concepts into this particular indicator can help us to find out the overbought and oversold situation. Why the overbought and oversold situation is very interesting is because when we want to buy long for a share, or if we want to short a share, we want to buy as lower price as we can. Also, we want to short as high price as we could, right? So this method can provide a better accuracy when we find out those overbought and oversold situations, because we introduced the statistics method in our calculation by using a mathematical way to find out those situations. Okay, so basically, if people do not understand what the standard deviation is, and we can quickly go through here, is the standard deviation is a statistic way that measures the dispersion of a data set relative to its mean. Okay, let's quickly bring up the Bollinger Bands once again and explain the concept here. So basically, how we calculate it is, we have three lines here: upper bands, middle line, lower bands, to form this entire indicator. So first of all, we have a moving average, 20 weeks moving average in the middle. Okay, so that is the average, its mean of this entire share price movement. Once we have this average calculated, and then we calculate the three types of deviation, depends which one you want to use. So currently we use type 2. We calculate the type 2 standard deviation and add this value to form its upper bands, and minus this value to form its lower bands. Once we have this, we can see we form a channel, right? The idea is type 1 deviations means in this channel we included 60 or 65% of price actions in the bands. If you choose the deviation type 2, it's more strict, which means 90% of the price action, in the probability calculation. So 90% of the price action will happen inside the bands. As you can see, it's included more price actions now. Let's fill up a little bit. Okay, once we have type 3, which means we want to include, in the mathematic term, should have 95% of non-price actions or even more, or happening inside this bands. Anything outside, like here, is really rare situation. So once you have this kind of bridge out of the bands, either up or down, which means very rare situation. Okay, and a very low probability you will have this. Okay, so why this matters is the Bollinger Bands can help you identify those kind of situations. When the price bridge out of the lower bands or upper bands, which means this particular share is extremely oversold here or overbought here. Okay, so if we change the deviation type, we changes the percentage that we want to include it inside the bands, because traders might use those signals might use this overbought and oversold as the trading signal. If you use the band 3, which means you don't have that many signals generated, right? Because 90 or 95% of the price will always stay inside the bands. If you want to generate decent amount of trading opportunity, you can change it to type 2. That's why people normally use this type of it. Yes, you can generate more signals of overbought right here, as you can see, but it's up to the trader who want to use this overbought scenarios in this particular case to actually do a short or sell or profit taking, etc. I mean, if we only talking about these Bollinger Band setup, don't use the deviation type that have so many price outside the bands, either up or down, because that means nothing. Um, it's losing the purpose of this indicator. And also, do not use the type that will exclude everything outside the bands, because you don't generate any um, signals oversold or overbought, right? So this is not too good. We want to have a decent amount of price actions actually remains outside the bands. Can remind us to take some actions we usually use in type 2. Okay, so it's mainly depends on how many signals you want to see outside the bands to tell you that's the oversold, or say that is the overbought. Average on is less significant than the standard deviation type, because if you change it, it's just basically saying how many units, time units, you want to use to calculate its mean, which is the middle price, the middle line here. Because some people using this middle line as the buying or selling signals, right? If you're using the shorter, if you're using the less number of the average on, for example 10, it will give you more earlier indication that price crossover. If you're using a longer time, as you can see in here, if you're using 30 weeks, you can buy in here, right? So that's the breaks out. But if you're choosing the shorter range, smaller number, okay, so you buy in a different chart. So basically you're stepping earlier from this particular chart. So because the higher price, it breaches out the middle line. Okay, so that's a significance of how to use the average on number. Depends on you, and the situation may vary as. Okay, so I just talking about the Bollinger Bands calculation. What's the meaning of that? Now I want to say talking about the use cases, or how people normally use as the for this particular indicator. Okay, let's say, so first the usage, the most important usage is generates the overbought signal, right? But as the author of this indicator, and he said the moving average does not tell you the direction. So because it doesn't have the prediction ability, but it just tells you a bridge out or bridge down, but it doesn't tell you the direction. So that's the limitation of this particular indicator. I think for most of the indicator, you have to combine your own analysis. So first the usage is people using the Bollinger Bands to buy when it's oversold here, and to sell it when it's overbought, either here or here or here, is meaning sell in this particular case. So that's the first usage, and the second one is when the share is in a very well trained, in a very well or robust uptrend. You can use the Bollinger Bands to generate buy and sell signals when the price cross over the middle line, as here. Okay, and you sell when the price cross over below the middle line, right here. Okay, so it's another areas to use this particular indicator. Some people use that the middle line crossover and down. So once you have that, another very important usage is people use the Bollinger Bands to monitor the trend. How they monitor the trend is to using the Bollinger Bands middle line as the support level. Okay, so particularly when people introduce step into buy long for trade for a particular shares because they're predicting this share will go in a uptrend in the coming months or years, right? But how do you observe it and then monitoring your prediction to correct it once it's not right and stick with it if your prediction is right, and you would use some sort of way method to monitor the trend. The Bollinger Bands middle line, people using it as a support. For example, um, if the price stays always above this middle line, means your prediction is correct, right? Um, Once it breaches down, and you think for this many months, it's always the price is always happening above that middle line, but once here, that this particular week, price breaching down, even though it's close above a little bit, but it breaches this middle line. So that's the signal. I use that signal as a sell signal. Can do some profit taking, etc. So yes, same thing with the upper with the downtrend shares. For example, this one. Okay, so the middle line behave as a resistance now. For example, in this particular period of time, until here, you can see the price always getting rejected when it reaches the middle line. So that's how you monitor this trend. For example, if always stays below, that means your downtrend is still intact, but this particular week, and you have to be aware of what's happening with this particular share, because the price now is step above the middle line. So that's the way using the Bollinger Bands to monitor a trend. Okay. Another one is very important concept because that's the author, Mr. Bollinger, is introduced. He was emphasized a concept as a squeeze of the Bollinger Bands. So what's that mean? Is instead of monitoring a trend, so this concept is different. It's saying we are observing the width of this entire band. Okay, the band means the width between the upper bands and the lower bands. If the price, if this band is very narrow, which means the Bollinger Band is constricting, it stays in a very narrow range, means the volatility is low. The band's width means the volatility. If you see the shares, the Bollinger Bands is very close together, which means this particular share is a very low volatility. Okay, and conversely, if you see like this, the bands is widely open. I'm sorry, the very wide, which means the volatility is very high. So of course, from the share, the volatility can change from the very low volatility to high volatility. The Bollinger Band doesn't tell you the volatility will going. It is going up direction and increase the volatility, and that is a very good situation when people try to buy long. And also, it could be the price falling and the volatility increase, the band's width increase, and that is a good chance for you to step in short the particular share. So the squeeze concept is you want to pre-position yourself to get ready before the volatility increase. Like here. So this the Bollinger Bands itself cannot tell you the direction is up or down. For example, that particular time in history, you don't know what is going to happen next, right? So yes, the volatility is quite low, everything's greased up, and you have to combine other type of indicator and also your fundamental analysis together to form a prediction that the price will go either up or down. So the Bollinger Bands tells you, okay, this is the moment, but up to yourself on your own research to decide is step in to go long or short. Okay. Once the prediction is correct and you stepped in the right time, and then that's a very decent profit. Cool. So that's the bands width represent the volatility for this particular indicator. Okay, so another usage of Bollinger Bands is I'm just trying to think of what else I have to miss, what else I missed for the usage of this particular indicator. Yeah, I think that's all I have now. I want to share you guys to this particular indicator. Unless you guys have more, and you can leave your comments here and down below, and because share your understanding of this indicator. I will be appreciated. But I think that's pretty much all for this tutorial. Thanks for your time to watching. I will see you in next tutorial.